A very good morning, listeners. This is your host Parthesh Shah, co-founder of Fintech, and you are listening to Night Snippets. Here is all what you need to know before going into trade for 25th September 2020. Starting with the international market, US Treasury yields fell on Thursday as labor markets data signaled the economic recovery may be running out of gas, but moved off lows after a stronger than expected report on the housing sector. Initial claims for state unemployment benefits increased 4,000 to a seasonally adjusted 8.7 lakh claims for the week ended September 19 compared to 8.6 lakhs in the prior week and 8.4 lakh forecast. Claims remain well above the peak during the Great Recession from 2007 to 2009, with talks for the new fiscal stimulus package at a standstill and seemingly unlikely to be reached before the November 3 presidential election. New single-family home sales rose to their highest level in nearly 14 years in August as the housing market condition continues to be a bright spot even as the economic recovery seems to be the sputtering. The US 10-year benchmark closed 1 basis point down at 0.67 percentage points. We expect the US 10-year to trade in the range of 0.66 to 0.69 percentage points. In the crude oil market, nothing major market moving news in crude oil, and crude is stable at $42.07 per barrel. Our view is neutral for now, and from a long-term perspective, we are bullish with a $50 target in 3 to 6 months. In the currency market, dollar index at 94.34. Yesterday, dollar's prediction was bang on. We successfully achieved our target once again. Today's dollar range 94.06 to 94.46. If 94.46 is breached, then 94.83 is on cards. USD CNY or Chinese yuan is now at 683. Just to remind, it has recently saw a peak of 6.75. With risk-off mode globally and recent rally in the dollar, Indian rupee also fell along with all the major global emerging market currencies. Yesterday, with a high of 73.98, rupee ended the day at 73.92. Today, we expect the USD INR to be range-bound with the range of 73.75 to 74.06. Talking about the domestic market, yesterday in first outright OMO of FY 21-22, the government did not accept any bids for Rs 10,000 crore OMO. This left bond traders confused on the government's intent. Today, bond prices may open lower as the market participants may be disappointed over the lack of purchases by the RBI at the outright OMO buy. However, speculations regarding the central bank stepping into the secondary market to purchase bonds and keep bond yields anchored may limit the fall in the bond prices. During the day, trade volumes will be low as participants will remain on the sidelines ahead of the release of October-March borrowing calendar later this month, most likely expected on Monday. Today there is Rs 30,000 crore GSEC auctions as well. We expect 3 to 4 basis point increase in auctions in yields for benchmark. We expect 577 GS 2030 auction cutoff to reach 603-604 range pretty soon. Exit auction ranges will be available by 10:30 a.m. If you have not subscribed to our services, you can reach out to us on 9930307496 or research at nightfintech.com. Just to remind you that there is a borrowing calendar coming on Monday. You may want to square off all your unnecessary trading risky positions and sit on sidelines. The event risk is not worth taking.